been a long time coming. They ain't cuffing my clock, they tuck it. Putting up numbers, 99 problems, and I still kept it 100. Hold up. Yeah.
Hello and welcome. Let me get my face up so you can see the froth that I'm in. Boo, 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 boo. Wait a minute. There we go. Hey, look at this. We got a guy working the booth. So about 8 minutes ago, you actually thought the market was going to go down today, right? No, we don't go down. You see, last night we had some residual selling at the end of the day, right? And we addressed it. Right? Hey, what was that? Some actual selling at the end of a day. That's usually institutional selling. And I'm talking about the QQQ. And this morning, first trade we did, especially if you were in the room with us, other than the S-bets and, some of these crazy weird stocks that we've been trading lately, I wanted to address the idea that we could actually short the Qs and make money today. And what we saw when I woke up was right around here. Qs had already tested VWAP, that had already kind of sold off, at 3 o'clock in the morning. We broke back over the VWAP, tested it. Everything about this was telling me, well, I guess we ain't shorting the Qs. But I had this idea, because late day selling usually is institutional selling, and those sellers usually are what we call residuals. There's some residual selling or some leftovers the next day. And the market opened up, and then it broke that range where it was kind of hovering right before the open. And then 1 minute into the market, we broke VWAP. And for the first time in a long time, our friend UVXY was going up simultaneously when the market was going down. That's a confirmation of weakness. So volatility products going up, VWAP break on the way down, residual selling from last night's anomaly, because again, it's an anomaly when the market goes down, because we never go down ever. So we addressed it, right? And it worked. And as I tell people, if you can't afford to short the Qs, you could always buy SQQ, which is short the Qs, and there's the VWAP break. So you could buy the SQQ, and you got paid. It's not as amazing as a trade, but at least you can leverage up here and buy it at $19.20. 1,000 shares, a couple of thousand shares, it goes up 20 cents, you make your $500. Or there's TQQ, which is another leverage version of the Qs, and you could short that instead of having to lay out $560 to do the trade per share. Here you only had to do $84.75, and it went down to basically $83.75. At least you made your dollar. What we did was I trade the mothership, which is the QQQ, because I'm a big boy. I got some dollars in my account. I could actually trade this, and I don't go nuts. I trade 400 shares. I just like being in the mothership. So I short 400 shares. And the first thing you do when you are shorting the Qs, you remind yourself that it's not going to work. Why are we even doing this in the first place? Because the market never goes down anymore, right? But we got to give it a chance, because UVXY was going up. Volatility products were going up. We did see late day selling yesterday, and we are certainly in this dash for trash moment of the market, meaning a lot of stocks that really have no business rallying the way they are not just rallying. They're going up 2x, 5x, 10x. We are in, as I like to call it, the ninth circle of hell of bull markets. And again, as a bear or a long-suffering ex-bear, I'm really not as bearish as I used to be, because there's no reason to be. The only reason I'm bearish is that I was born into the pump and dump boiler room scam portion of this market. And I believe the whole thing is rigged. But now I spend my times exposing the absolute rigging of the market, and that is proved every day by technical analysis around very simple blue line and an orange line. So today's blue line, if you don't know, hi, my name's Kenny. All I do is trade VWAP and price. Blue line is today's VWAP. Orange line is our secret sauce called multiple time frame VWAP. It's not an anchored VWAP. It's just a multiple time frame, and I have it set to a very specific thing. Today's VWAP, and I grab yesterday's aftermarket, but now it's 24 hours, so I grab yesterday's data and the pre-market from the prior day. And from experimentation over the last 12 years, I have developed a trade that works almost every time it shows up, and it's starting to become bewildering that it just keeps working. And I think that's the number one fear right now, that we're starting to believe that it can't keep working like this, but then it does. And that lends to fear, because nobody wants to be the one that breaks the streak, right? All right, it's not going to work again. Oh, it worked again. Damn it. That's not going to work this time. I'm not going to even do it. Oh, it worked again. And you feel like, all right, the next time that it comes around, you're almost more frightened, even though you know it works every time. But because it works every time, you're starting to become skeptical. I'm with you. But every time it shows up, it proves to be a profitable trade. So let me walk through the idea here on this, the idea with this VWAP. And this is not your classic trade. The classic one just showed up about 20 minutes ago. It's already over. And that's why today's going to be more of a review of some of the trades that we did and what we've been doing over the last couple of days. This S-bet has treated everybody well. And I will be perfectly honest with you. I screwed the trade up today on S-bets, my one loss of the day, because I gave myself $1, wiggle room, and I just happened to top ticket, and I got smoked for $1. And then it did go down 3 points after I got out, and of course promptly came right back. So I'm a little miffed about that one, but let's walk through this whole idea that the market could actually go down today, right? And that was our notion. That was our thesis. That was our inkling, as dumb as it is, because the market doesn't really go down anymore. But if it's going to go down, it's going to break VWAP, and it's going to break what we call pivot points. See where this is the economic data. And again, economic data in a bull market is irrelevant. Nobody cares about CPI or beige books or whatever data they're going to throw at the market. Nobody cares when we're raging, going up every day. The data comes out, everybody says, oh, okay, bye. And then we go up. It's basically the same thing every day, especially since the power gap that I explained to you on May 12th. After May 12th, the market basically was prohibited by law to go down. I'll show you, if I haven't shown you the power gap on May 12th, I'll explain that later. But let's talk about today's trades. So residual selling, right? Yesterday at the close, we actually saw some sellers, and it was a pretty damn good sell-off, and we got paid. We shorted the Qs. We had some 558 puts, and they were, a 10 bagger for some people. I only made 1x on it, which was fine, doubling your money. But this is the action overnight, right? And there was that late day sell-off. So you see how it hovers at the VWAP and then breaks down? That's your trigger. So if you're hovering above the VWAP and you test VWAP from on top and hold it, generally the next move is the rally. But if you jiggle, or we call it the jiggle or the shuffle, by the way, SRAD all-time highs, you guys are all in it since you met me. I've been telling you about the stock SRAD at $21.50. We started buying it, $22.50, $25. And what did I say? 25 will get you 30. Do not sell any of this stock if you own SRAD. It's going to $50. It might take about a year and a half, compared to some of the other names that we're trading. A year and a half is like a lifetime compared to some of the names that we've been watching going from 20 to 50 in a day. Loving the SRAD. Anyway, so yesterday we saw the residual, the selling, something we haven't seen in a while. Little spike in the VIX and an actual sell-off into the close, which bled into the aftermarket. Real sellers showed up yesterday for the first time in what seems like 3 months. Okay, cool. You take it under advisement, and then you come in today. I wonder if that seller will be there. So here's the overnight session. You're back above VWAP, as I explained. But then comes the open. And I'm waiting to see if that residual seller, that guy from last night, is going to show up. Bang. Showed up. Now, I'm glad it worked. But the reason I like the way we trade, and this is how we trade every trade. Why am I getting in, and where am I getting out if I'm wrong? Call me a pessimist. Fine. I plan to be wrong first, then right afterwards. I plan negatively. Like, all right, if this goes horribly wrong, what am I going to do about it? And in this case, there really wasn't much to be worried about because you had just that candle. That's the 9, that's the opening high candle. So when you fade a stock, and that's what this was, the fader is just looking for sellers to show up at the open. But if they don't show up, the fader quickly gets out if it breaks the 930 high candle. And then usually there's one more area of concern. And you see that orange line? That was my other area of concern. You never want to see stocks breaking back above a prior day VWAP while you're still short. And if you're taking notes, that's a good one to write down, son. Because all this stuff plays out every single day. And all these rules and regulations that we trade around continue to show up every day because it's basically the same day every day. That's why we're consistently good traders, because we do the same thing every day. It's taken me 30 years to get here. I've bottled this up. And if this is how you follow the market now, you'll be set. All right. So let's walk through it. 55676 starts to break. I'm short. First target is the pivot from where it held earlier. What are we doing there? We're covering. But on the way there, look what the Qs did. These are testing it from underneath. And each time it tested it, it couldn't close that candle above the VWAP, confirming our delusion that the market could actually go down. Whoa, amazing. And then it got to basically that pivot. We were about to cover, but it wanted to test our let's call it our balls. Let's test our chutzpah, test our strength, test our belief. So it rallies back to where? Right to that pivot where it broke down from. And at that moment, I said, my God, people, we just made it. A whole 19 minutes of being short the Qs. We had broke the record up until this point was 7 minutes, because that's all you're getting. No short was lasting more than 7 minutes in this market lately. So we made it. And then it rolled over. And then it broke down. And that's when we started getting a little excited. Like, wow, is this actually going to happen? So let me show you what I look at generally. So that's the 1 minute and the 1 day. And then I'll look at a couple of days worth of data, right? So that's 2 days worth. Not really helping us. 3 days worth, not really helping us. Look at 5 days worth, not really helping us because the market's kind of been going sideways, right? So I look at 10 days. And I was like, oh, okay. The 10-day is right there. So let's look at that as next goal. Boom, we got it. And because the market has been going sideways over the last 10 or 15 days, sideways with a bullish tint to it, but a little bit sideways. It's been a grind, right? So these multiple time frame VWAPs are going to all be close to each other. So I grabbed more data and I went to the 15-day. And that was our target, right? The next target. So what happened? Why are we not short anymore? Well, let's walk through the process. Whenever you're short the Qs, what are you supposed to say to yourself? Why am I even doing this? This trade sucks. We never go down. But it's working. And as it's working, you have to remind yourself, right? What? Inevitably, you're going to have to get out. It's inevitable because the trade just doesn't ever follow through because we're in a bull market from hell. But in this case, right? In this rare case, right? Test breaks down. And then it breaks a new low. Now, you guys know about the faux show bro, right? That's how it sets up. It convinces the shorter, in this case, me, that, ooh, look, we're breaking lows. Oh, this is going to get crazy. And then it comes right back. And in that moment, I said, uh-oh, I think we just faux showed. And I started to cover. And then I let it breathe because I'm not going to cover my entire position at one price. I'm trying to hang in there. And it doesn't break VWAP, so we're still in. And all the while, not only were we short the stock, but what I do is I trade at the money options that expired today. Now you're going to see some fun. Watch this. You see this chart? That's the QQQs. I trade at the money options for the day in lieu of the stock sometimes, because that option contract will trade as if it is the stock. And here you're only laying out $1. Much better. Because if the trade goes horribly wrong, you're out $1. You short the Qs at 557, trade goes horribly wrong, you're probably out 250, maybe 5. So coinciding with this chart right there, we bought the, and this is what I love about Thinkorswim. If you're not using Thinkorswim, maybe you should. 556, sorry, I'm putting the wrong thing up there. QQQ, you put in the drop-down menu, right? Hit enter. And it will give you the QSIPs for the day. You'll see them in here. So let me just go near the money. 14. So 556. Oops, sorry. I just want to take a look at this chart for a second, right? You see that chart? Let me get rid of these red lines for a second. I'll show you some more fancy red lines later. By the way, the red lines are what I do. I put my own pivot points on there. So 556 puts, right? Sorry, it wasn't the 556s. Wait a second. Where the hell did my trade go? Oh, there it is, right. Nope, sorry. 555s. There she blows. What? All right, that's the same chart, but this isn't my trade. Wait a second. I'm trying to highlight. All right, I'm clicking on the wrong one. I apologize. There she is. All right. Now that's the one I traded because I draw a red line at that's my price. That's where I was selling. So you see how it's basically the same chart as the Qs, but flipped over because you're buying puts, right? So in this case, what are we doing? So there's the put buy. I didn't get them at 80 cents. I wound up getting printed at 98. I don't mind buying them at 98 because I'm thinking possible 5-point move. So I'm buying a contract, and my target, like I showed you, was 550, 50. So I was thinking we were getting a 5-point sell-off today. So buying a 556 at $1, I'm risking $1, thinking I might make 5. Let's go. So, but because the nature of this market and the inability to make money as a shorter, we do something that's smart. Take profit. And by the way, I'm sorry I'm sitting here. I should have mentioned to buy USAR. It just broke. Let me just pivot for a second. If you were waiting for a reason to buy this stock today, it came all the way back down to the price we bought it yesterday, and it held. And it held, and it's just another moment where I want to just show you how these multiple time frame VWAP. So that's your 2-day, right? So here's your 3-day. Huh? And that red line was where we were going to buy this stock back. I hope somebody did it actually in the room. And this is what I do. I set these parameters each morning, and I give them out to the room, and I say, all right, choose your poison. Some people love the Q. Some people like trading SBET. Some people want to go with BMNR. Some people did the SRM trade, which was awesome. And some people might have just stalked this one because I'm very passionate about buying it, but we came in, it was already at 18, taking some of the enthusiasms I had. Enthusiasms. What movie? Come on. I'll give you a big hint. Robert De Niro. Enthusiasms. So some of the enthusiasm was out because the stock was basically where I thought it could go today already. So I addressed that, and I said, you know what? Instead of looking to buy this thing, how about we short it? Bah! Thing gets smoked, right? Blue line, orange line. But anyway, the reason I'm talking about it this second is that we were waiting for it to come back to 1380, and not just because it's the 3-day VWAP. Let me show it to you on a 5-minute chart and really just bring it on home. Here's where it broke out from. This is where we started liking it yesterday, the 1350 break. But really, we didn't get excited about it until it broke 1380, which was my price. 1380, we got right back to that $15. It was a great trade yesterday, and then obviously did pretty well for the rest of the day. So today, the retracement, I wanted to see it come back to the breakout area. And this is what I call the Zach Hurwitz moment. Okay. Who the hell is Zach Hurwitz? I'll explain. Zach Hurwitz watched me. He was a member of our chat room, and he was a disciple from Brian Shannon. And of course, Brian Shannon, everybody knows, the overlord of VWAP. Brian Shannon, the only book you'll ever need about VWAP trading, right there. And if you act now, he'll sign you a copy. Anyway, the Zach Hurwitz moment. So Zach was trading VWAP exclusively before me, and he was a member of our room, and he saw me drawing these red lines. He's like, do you trade? Seems like you trade around VWAP. And I said, who cares about VWAP for day trades? And he's like, apparently you do. And that's when my new career was born, because these trades, I was already setting up, and I call them pivot points, little breakout areas, spots where stocks would pull back to, just like this USAR today. I was looking for it to pull back to 1380 because that was a significant moment yesterday. And then look where the VWAP, this multiple time frame VWAP is telling me, yeah, Kenny, that 1380 was kind of special, even though it says 1378. It's 2 cents away. Come on, give me a break. That 1380 was pretty damn significant. And look what happens. It comes back to that area. So if you were sitting there waiting for it and you bought that, this is what trading is all about for us. We take trades. Nobody knows if these trades are going to work, right? But we have something that works quite often. But more importantly, every trade, like I was describing on the cues, when you're trading VWAP in price, every trade you put on, you know why you're getting in and where you're going to take that loss if you have to. Risk clearly defined. So if you were looking to buy USAR, bam, it came to the price that you wanted to buy it, and you had a multiple time frame VWAP down there. You're buying here at 1385, 1390, 1392, or 14. There's your risk. And for a day trader, generally stocks under 30, we're normally buying, at least 500, possibly 1,000, right? You buy 1,000 shares at 13, let's call it 14 to be fair, with a 14-cent risk. Because if it breaks down there, it's going to get jiggy because it's a multiple time frame VWAP, and that prior area that you're probably going to roll over and maybe even get hammered. But these scalps, as we called them back in the day, I don't know if anybody calls it scalping anymore, but just putting that risk reward out there, and when you get it in your favor and you buy it, stock pops 30 or 40 cents, you make yourself $300 or $400. You really just need one of those a day. And we find 10 or 15 of them a day. And when I say one or two, if you can make 2 trades for $250, which is not hard to find, and you're making $500 a day, that's about $130,000 a year sitting on your ass as your own boss, in control. And generally the day is over by, 1 o'clock. And then usually I come back at 3 o'clock to see what's up into the close. But you get a nice little window of, you can do whatever you want. Or like I do when the market, starts to get really kind of slow in the summer, I leave, which is awesome. You make that money, take that money and go play pickleball, go see your dad, or go to the beach, or do anything but sit in front of the computer all day. Because generally you get in trouble. Idle Hands, the workshop of the devil. I forgot what movie that's from. Idle Hands, workshop of the devil. The more you sit here, because we're all degenerate gamblers by nature, you're going to put a trade on. It's just our default nature. You're sitting here, you're going to find something to do. And it might not be as disciplined as you should be, because you're just sitting here, I'll just put a trade on. Blah, blah, blah. And that one moment where you lose your discipline and then you lose on that trade, what happens next? Oh, man, I got to make that money back. Next thing you know, you're putting another trade on because you're trying to make that money back. That's like betting on Monday Night Football. Why do you think Monday Night Football is so popular? Because all the losers are trying to make their money back from Sunday. That's like afternoon trading. That's why afternoon trading is kind of difficult. You get a lot more chop. You don't get that follow through. And you tend to lose money. And I took the easy road. I know when to fold them. Lately, I'll be honest, there has been action. I mean, pretty much since COVID, there's been action all day. It really is amazing. And we're getting to that point where we're slowing down a little bit because the market's kind of taking a break right now, digesting this monstrous move. And the afternoons are getting a little bit slower, but there has been action all day, almost every day. It is incredible. All right, so let's go back now that we just threw that out there. I just want to know if anybody bought that dip and made some money, because that's one of my names that I'm digging. So let's go back to the Qs, right? So that trade that we put on, right? There's those 5.56s, right? You buying them at $1. The most you were losing was basically $1. I don't know if you guys, usually when you're dealing with these 0-date options, it's at least a 50% loss or 100% loss, but you're generally, when you're right, it's usually a double or a triple or more. And again, I thought we were going to drop 5, so I'm thinking, all right, I'm risking $1. I'll sell some at 2, 3, 4, and hopefully some at 5. And we sort of got it. And again, percentage-wise, this trade is a lot better than shorting the Qs. But here we're buying the option at 98 cents, and again at 125. And if you were in the room, you heard me. Hey, I'm selling 2 contracts, just to say I did, right? And again, if you buy something at $1, you sell it at $1.25. That's not a bad trade percentage-wise. I know it's only $50, but it's $50 you can't take from me now, and I still got 8 contracts left. So now I put 2 more contracts out there at $1.50. Wham! Sold. Now I got 6 contracts left, and that's some more money that you can't take from me because I'm in a trade that hardly ever works, so I might as well take that money. And then look what happens. We get to $2. Sold. 2 more contracts. Now, when we broke over 2, I'm thinking, hey, let's go. We're going to $2.50. And this candle, I'm not even selling anymore because we sold enough. Now we could dream a little bigger. We sold 4 contracts. Let's hold on to 6. Sorry, I had 5 contracts. I had sold 2 and then 3. So here I'm thinking, let's go, $2.50. All right, we're going to go. The market's going to crash. And then reality set in. And that reality gets triggered, you're stopped. Because where we sell on the way up is generally where we sell on the way back down. Where we sell on the way up is generally where we sell on the way back down. So where do you think my stop was? 150. And at 150, right, when it triggered back under 150, sadly, I was done. But at least I sold 125, 150, $2, and then 150. Not a bad trade. And then this happened. Right? And then this happened. Same exact trade. Just kind of being in the ebb and flow. Now, again, this was more of a news-driven moment, right? But let me show you on the regular chart. So something, something Powell, something, something Trump. I don't give a shit, right? That's what happened. Anything this guy's talking about is irrelevant now. He's basically moving the market because he's manipulating it. You would too if you had that power. But it's blatant now. It's almost comical, right? So the market sells off because he says he's going to fire Powell. Oh, yeah? Nobody cares. Within 2 minutes, nobody cared. But then that made me care. Why? Because all I care about is price action. Oh, Powell's getting fired? All right, we'll be ripping any second now. And then we started to rip, and it was kind of funny. But then it tested the VWAP from underneath. Oh! What did I just explain to you? If you test from underneath and don't break, that confirms the weakness. So then you actually had permission to do something insane. Short the Qs again. Go back to that same contract. So look, now you're still around 555, and as it starts to tank, you had to chase a little bit because this candle was kind of vicious, but that right there confirmed this delusion that the market could actually go down today. And UVXY was ripping. So we went short the Qs again. And then we worked our way through it. I won't go through the whole thing, but suffice it to say, it worked. We got out, knowing that the market never stays down. UVXY starts to tank, and the market starts to rally. And we're right back to where the whole thing got started. And awesome. So let's show you another trade. This was the easiest trade of the day. You guys, I mentioned SRM, right? This is just momentum, baby. Let me get rid of my red lines. And by the way, if some of us are still in the SRM trade, I am not, sadly. But let me show you why we bought it, right? SRM is SBET's illegitimate cousin. What? That's exactly what SRM is. SRM is SBET's illegitimate cousin. Just let that one, it's a think piece. They're basically the same stock, right? Blah, 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 something, something, Bitcoin. Who gives a shit? Doesn't matter. We don't give a shit about any of these companies or what they do. Right now, the fad is, you mentioned something about MicroStrategy. Hey, we're doing that thing that MicroStrategy does? Yeah, we do that too. Ooh! I guess we got to run your stock 40x now. BMNR, SRM, SBET. Have you noticed there's a trend here, right? So, okay, SRM, Straza, by the way, tipped us off on this one on day one, a couple of weeks ago. And this thing went ripping to $12. And then, here's where I come in. I love when a stock crashes, because when it crashes and comes back, the levels that it crashed from are easily seen because it's made these moves for the last 2 weeks. So when it made that turn and you got some follow through today, the target was those prior candle highs. So our target today was the 908. Boom. So luckily, we had our target at 908, right? But luckily, what it did was it did us this wonderful favor of double topping at $8. And it was fantastic, right? So there's the 8. There's the 8, right? So it plummets. So there's the 8, the first chance that tried to break it, couldn't break it. Then you get a faux show, bro, and it goes right to 8. Couldn't break it. And then it rolls over and consolidates. And then little faux show, bro, and then it breaks 8. So you got a VWAP consolidation, faux show, bro, big fat whole number 8. You bet we bought the shit out of this thing. And woof, trade of the day. $8. And again, sadly, I trade very conservatively. At 8.12, I was already selling some. 8.25, I was selling some. 8.50, sold some more. I had some decent size on. By 8.70, I'm down to basically 20%. And by 9, I'm done, which was a pretty good trade, right? Now, you go back, and that little tiny blip right there, the reason I only use 2 lines in my charts is because that the faux show, bro, right? When it faux and shows and holds specific levels, that's the rigging. Well, I should go, that's the rigging. Depending on where you're standing. Guy, that's the rigging I speak of. So the market or any stock, and again, as I've been doing this my whole life, it just seems like the market wants to get the last person out. It doesn't want you to be involved in the big move. We all have gone through it. Shit, I just got out of it and then it ripped. Yes, happens to all of us. But when you use prior day VWAP and you sit here and you understand that you are being duped, it is rigged, and you see the rigging, bang, bang, partner, breaks the VWAP. And I was talking about shorting it because it was breaking a quadruple low and the VWAP. And then it went right to the prior day VWAP to the penny. And it came right back. What's that? That's the faux and the show. Buy it. So if you were crazy enough to actually get the short off, which I couldn't because I thought it wasn't easy to borrow. I thought I got it off. And then I had a spinning dial. I don't want to talk about my computer's been freezing up today. But in this moment, fake out, shake out, buy it. And once again, now you've got risk defined. So I'm thinking the stock's going to $12. I could buy it back here at $8.39 with a 17-cent risk. So I'm risking 17 cents for a stock that I think might be blasting off for 4 points. That's risk reward in your favor and another payday. And there's nothing better than staying. I'm trying to teach my son, who's in the room nowadays, what's up? And by the way, when I say fuckhead, my son, fuckhead that he is, he left his wallet in dead man's hand. Just every time I say my son, I think of Christopher Walken, even though my son, he's a very sweet child. But I'm trying to teach him, right? And this is it. You stay with 1 or 2, 5 or 6. Once you breach to the point where you're looking at 15 different symbols, unless you're a cyborg, you're going to have some hard time concentrating on that many names. So you stick with your financial stocks. They were kind of, once again, slow. I mean, the Goldman Sachs short worked. 10 points. It was 10 points, right? It worked. I'll get to the Goldman Sachs in a second. But the reason I didn't focus on the Goldman Sachs is not everybody here is trading $750 stocks. I'd rather, trade something where everybody could get involved in, like a $9 stock or a $30 stock or a $22 stock. I try to do a little bit for everybody, right? But really, my bread and butter was born out of the earnings reversals on earnings stocks. But lately, these other stocks have been so advantageous to trade that I'm kind of going away from my favorite trade. But let me show it to you before we go any further. Here's the Goldman Sachs. And by the way, this is the trade, right? Once again, hasn't failed, right? What happened? Oh, did I lose the other room? Oh. Yeah, I didn't have the microphone on in the other room. I figured you guys were all watching me on the other channel. Sorry. Hello. Okay, so Goldman Sachs, right? So again, let's go through the process of what we do here. It's called an earnings reversal. It's called an earnings fade, and then sometimes you get the reversal. The reversal is the best part if you get it, right? In this case, you see that chop, right? It's bearish chop because you're still in a downtrend. It's apparent, again, I've been looking at screens and charts my whole life. You see it, right? Higher, lower high, lower high, lower high, lower high. It's a downtrend. But more importantly, let's get rid of the red lines. I'll show you why I drew the red lines, because that was our danger zones at the time. So what is it when we say we're fading? If you're not fading, you're not trading, right? This is as easy as an explanation as you're possibly going to get to any trade. You bought Goldman Sachs 2 days ago, and you knew they were going to report earnings. The earnings came out, they were good, and the stock is up. What are you going to do? Probably going to sell some, right? When? As soon as you get a chance, right? Which is basically the open. That's the fade. So when you get a stock that's gapped up on news, which the news is usually an earnings report or maybe sometimes an upgrade. That's why I sell. And that's one of my favorite trades, by the way. Upgrades are usually sells. I know it doesn't make a lot of sense to the novice trader, but trust me, upgrades are generally sells. And you'll see, the more you see upgrades and they get sold off into, because again, it's a form of manipulation. But this trade, the reason I love it so much, that it makes rational sense. And that's something we just don't have much of anymore in an irrational, psychotic bull market from hell that we're in, right? But this is rational thought. It's gapped up on earnings. There'll probably be some profit taking. When does the profit taking kick in? VWAP break. Thank you very much. Let's do that trade. And look at this trade. So if you walked in and you were brave enough to play the fade, so again, let's walk through that process. Right? Shorting is short-lived and you're going to die. I'm glad you said that. But in this case, actually you were resurrected 3 different times. That's why it really wasn't bad to focus on the Goldman Sachs. But if you're not trading it accordingly, you probably get your freaking head chopped off, because that's some massive chop. So let me explain the 1 or 2 times that it really did make sense. The opening fade, right? The opening fade is just, again, the idea being confirmed by the VWAP and prior day VWAP. But more importantly, look at this. Prior day VWAP, blue and orange line. Today's VWAP, orange line is prior day. It had already tested it in the pre-market and held, and then it bounced. So now not only were you getting a VWAP break, you were getting a prior VWAP break, and if you do, what movie? Robin Williams. So you got a VWAP break, breaking a double bottom prior day VWAP, short it. You got yourself a 1-minute multi-day VWAP reversal. The trade that hasn't failed in close to 3 years. And just with a measly, let's say 100 shares, the stock plummeted from 708 down to 694. Know what I call that? Days pay. Even 50 shares. The bigger you are, there's more, let's go with chutzpah, or just the size of your account. One day you'll be able to trade 400 shares. That's a $4,000 trade. But let's say you missed it. Kenny, I'm afraid I can't trade the open. I'm not going to short Goldman Sachs out of the gate. Are you mad? And then it rallies all the way back to that price where you were dying to short it in the first place. The same exact price. And then at that moment, and this is what I talk about, how you got to go revisit or stalk 3 or 4 symbols. Because if you went back to check on the Goldman Sachs, you would have seen that. Oh, wait. And now it's not breaking over that same exact price and it's rolling over. Hey, now you could short it with a 1-minute multi-day VWAP reversal again at 705. And now you know you're risking 2.5 points because it's clearly right there, because you're not going to let the stock break over a double top while you're still short. So you had another chance to do it. And look where she went. The same exact freaking trade. So if you were afraid of the fade, they gave you a chance to do it again. And they gave you a chance to do it again and again. Maybe again. And that's the beauty of what we do. These trades replicate. And once you understand the market mechanics and you have my secret sauce, the multiple time frame VWAP on your charts, there will be no math on the quiz. This is the math. It's giving you the rigging. It's like you're walking into the casino and the casino pit boss by the roulette table says, hey, you, come here. I like that shirt. For the next 20 minutes, only the numbers 12 and 15 are going to be hitting. Okay? Well, what do I do? You bet on 12 and 15, you schmuck. Oh. That's the advantage, right? You have an advantage. You have an edge. And if you just do that every day, and again, we all have our little side projects. And if you guys know about me getting my ass kicked about a year ago on UVXY naked options, we all have our side projects. This time my side project went horribly wrong, whatever the hell that was on the yen carry. But if you stick with this trade around earnings and stocks that are in the news, and you just trade the VWAP and the prior day VWAP breaks, you should come out ahead every year, every day, every week, every month, every year. And then, you know, going back to the old school ways that we used to do this is we would make money day trading, and then we would buy the QQQ with some of our money or buy whatever stock that you liked. So we took day trading money to fund our other ideas. And in this case, and again, this is, and I'm not the best swing trader. All my swing trades have been working. And as Fami, if you guys know Joe Fami, he likes to always remind us that we're not as smart as we think we are while the bull market is raging. I am this smart, Fami. I'm a genius. No, but all kidding aside, when all my swing trades personally are working, you know we're in a crazy bull market, because I have a knack for overstaying my welcome. And, you know, and again, that's why I'm kind of bearish. I've had some bad luck with my stock picks in the past. Let's just put it that way. So yeah, I'm glad this SRAD is breaking out. I mean, this one made a lot of sense to me to own. Plus, I love it. I love the conservative nature of the action in the market. It pulls back, it rallies. It pulls back, it rallies. Pulls back 2 days, rallies 2 days. Always in an uptrend, always consolidating, and always resolves itself to the high side. And we're at all-time highs. And I've never seen a stock, ladies and gentlemen, I have never seen a stock that looks like this, that got into the 30s, that inevitably didn't end up in the 50s. This is my stock. I like the company. I like the industry. I like the action in the stock. It's at all-time highs. And like I said, this is the lifetime. I'll show you the lifetime chart on this name. And you see why we bought it coming out of the Andy Dufresne. This is what we call a Kardashian bottom. Big butt cheeks, sideways action, big butt cheek. And that was the lifetime VWAP break. That's what piqued my interest in the stock in the first place. I didn't start taking it serious till had that. I wanted to see them report earnings one time before I got involved. Earnings came out, stock was down $1. We started buying it, and 9 points later, I've never seen a stock do what this has done and not go to $50, because generally once you get into the 30s, you're headed to 50s. Stocks don't usually stay in the 30s too long. So loving this name. I do expect some consolidation as we're, getting towards that 30. I wouldn't mind a couple of more days, because every time the stock consolidates, it winds up breaking out. And it's kind of why I own it. So that's pretty much most of the day. Here's a couple of takeaways for later. I am delusional enough and psychotic enough to think I can't even say it without laughing when I talk about the market actually going down. It's like my body rejects the idea. We're never going down. But right now, at 12:47 p.m. on July 16th, UVXY is still green and the market's still red. And if we're still red at past 2 o'clock, and let alone 3 o'clock, right? And UVXY is still green, and we're under the VWAP, and if we're breaking down, let's call it that last pivot. I think we do get the follow-through move later down to that 15-day VWAP, and that'd be nice. So I'm kind of stalking the cues for another short. And again, I understand more than anybody, it's a very difficult trade. Even when the market's going down, it just never stays down. But this market just does not want to sell off. It really doesn't. And it's not going to come. A sell-off is not going to come because Trump's threatening to fire Powell. That's a news-driven bullshit event. When the market will be going down is when it starts to go down and there's no news. We call it an organic sell-off. Market's going, hey, why is the market going down? What's going on? It's just going down. And then that triggers another sell program, which will trigger another sell program. And that's what I think we might get. And now, as a delusional bear, so I look at some of these levels, and now if we could actually go down through the 550, 60, I'm really looking for it here. So there is another Zach Hurwitz moment. So I look for stocks to retrace to back where they came from, right? So there's right under the 550, you got the 49.50. But then you had this faux show bro, which started this next leg up on the market. I do think we're going to get down there. And that's it. That's it. Because even if we do sell off, it's not like we're going to break down. I'm just not seeing it. I'm not feeling it. There's nothing to think this market's about to give back 20%. And considering that we've crashed 2.5 times in the last 250 days, it would be almost unfathomable. I can't say that word. It would be, it's impossible to think we're going to get 3 20% sell-offs in, again, we're still in from August 5th of last year. We haven't even got to the yen carry anniversary. And we've had two tariff tantrum crashes. The idea that we're going to have another 20% drawdown this year, it doesn't compute. Doesn't mean it can't happen. But when I think the market's going to sell off, I'm not even using the C word. Correction. Not that other word. Correction or crash. Not that other word. But give me 10 points. Give me 10. Give me 3 today. Give me 4 today. Give me 2 tomorrow. Give me 5 more on Friday, and you can have it back. But right now, I'm just, again, I'm slanted towards maybe believing that we could actually have a late day sell-off. And I'm not putting the trade on until I get that kind of confirmation, right? So what's the market doing right now? It's confirming I'm wrong, right? It's confirming I'm wrong. Every time it sells off, it comes back, right? So above here, I'm going to start pretending I never had this conversation. Above this orange line, I'm going to say, all right, this is definitely not happening. But all of these levels, and again, this is why it's an if-then. If we consolidate going sideways, but we don't break, and then we roll, that confirms my dumb idea that we could actually sell off into the close. And that's kind of what I'm stalking right now. And let's go back to Bank of America because we're stuck in this for a long. Oh, it already happened. Okay, well, this happened. So again, typical. Now, if you're asking yourself, why was I thinking about buying this? Because it's down and we're in a bull market. And I was waiting to see if it tested 45. And why is 45 significant? Because the market's rigged to half numbers and whole numbers. So beautiful trade, 1 minute multi-day VWAP reversal on Bank of America, the trade that never fails. It happened. And because I missed the short, I was looking for a reason to buy. And now I've missed the reason. I missed the buy because I'm too busy looking at other things. And offer anybody in here in the Bank of America, because now you got 45, got your 45.50, and you sell some there, and you put your stop. You see that? Look at that beautiful symmetry. Top of the candle, bottom of the candle, bottom of the candle. That's your stop. And now if anybody is long Bank of America, you don't sell any more of it. You wait to see if it breaks there. If not, you hold, because now you got to assume we're going to get the VWAP reversion trade. And if it gets through there, chances are you'll be looking at 46.10. And again, the bank stocks were, not as hot as I thought they would be. JP Morgan was a dud yesterday, still is. Citibank was all right. And then we got Morgan Stanley. Hello, Morgan Stanley doing the thing that I just explained with Bank of America. So again, it's a very friendly market to be buying dips in, if you haven't noticed. All right. And just to round off some other names that we're looking at, obviously the SBET, not in it anymore. I've cashed out of everything, and then I got smoked. So just to show you how trading is actually hard. That was me, breaking through 34, double top break, just faux show broed. I should have been buying it at 33. I wound up chasing at 34. I knew I chased. It still wound up going up 75 cents. I was about to sell. Next thing it starts to roll over. I wound up selling at 34, and then I wound up getting hammered on the rest because it dropped quickly $1, and I was forced to sell because I don't let the stocks break the VWAP. And that was my only loss for today. I just got, lost $500 on that move right there, because in the one time I got greedy, one time, because usually I buy stock at 34, I'm selling some at 34.50. In this case, I was like, we're definitely going at 35, and I wound up giving it all back and then some. So, hey, what's up? So, yeah, that's my story. I'm sticking to it. I'll give you another one. If you guys haven't noticed, the quantum stocks are back in a big way. And if you don't know about me, Google Kenny Glick, Yahoo Finance. And about 2 years ago, I told everybody the next phase of the bull market will be space, rockets, robots, AI, quantum, and chips. And nobody knew about quantum stocks. I'm surprised, actually, not that many people knew about some of these names. And it's because I've been doing this my whole life. About 2 years ago, or maybe more now, there was a moment where the quantum stocks had their first attempt to rally back here. This was rigatoni back in 2023, RGTI, right? And, just like everything else, it was just a pump and dump. But it got me interested. Quantum computing, that's probably going to power the next generation of everything. Read about it. Anyway, I read about it. I don't do much reading, but I was interested, right? And then, quantum started making a little resurgence. You know how I love myself an Andy Dufresne pattern because I was familiar with the symbol. I actually caught it there. But then look what the stock did. This is, if anybody needs to know, one of the biggest, bestest Andy Dufresne Kardashian bottoms I have ever found in my entire career. And if you're out there and you're thinking, what the hell did I just say? Let me explain. Andy Dufresne is a reference from the movie Shawshank Redemption. And Andy, to escape from prison, had to work his way through a 1.5 mile sewer pipe of grossness and awfulness, or whatever Red said. And the more stock travels there, and there's always a couple of attempts to escape the realm, and that creates the butt cheek. So big ass butt cheek, but still going sideways through the sewage pipe. Enter the Kardashian bottom, the Andy Dufresne. So Kardashian bottom, butt cheek. Andy Dufresne's just the sideways action, the inability to get out. And all of that underneath what was at the time the 2-year VWAP. So when this stock came out of Andy Dufresne and out of the Kardashian bottom, I was telling everybody who was listening, put your life savings into the stock, because I haven't seen an Andy Dufresne for 2 years since the infamous Carvana trade, which now is just legend. It's hard to believe that this actually even happened, but this was an Andy Dufresne Kardashian bottom, and we were buying the stock at $8.50, and we were happy selling some at 17. I remember that day. But our next target after that was the top of the Kardashian, right? And that was at 1987. And then let me show you something else here. If you scroll out on the Carvana, why I love this trade, I said if it could break through 19, the next area is $56. And if it breaks 56, it could go easily to $98. And it went to 364. So when I see those chart patterns, I immediately go think this could be another Carvana. And I'm buying a stock at $2.20. I'm in. So that's why this chart pattern is so awesome, because it not only replicates on the day, it's also good for day trades, swing trades, investments, and knowing your long-term chart, and then you focus back onto your day chart like this SRM. Come on. Right? Look at this piece of garbage. A lot of the reason that I like it is look at this piece of garbage. When the garbage gets resurrected, all the people that were just waiting for this thing to go to zero, I don't know why anybody would be shorting it down there. But when they come out of that pattern of disgusting muck and awfulness, they tend to go nuts. And that's why I stay focused on some of these names. And now, obviously, I don't think this thing's going back to $1.20 anytime soon, right? But there's the first explosion. Then it consolidates, little sideways action. And now it's coming out of that sideways action, and we like it. And now I want to also show you something, and I'm going to blow your mind, and you're probably going to hate me for this, but I was told never to mention call spread, but I have to. I have to mention call spreads because we bought one. So we bought the $10 calls on the stock. And actually, you could do it right now. This is exactly where we bought it anyway. So they came down in price. And these expire in 2 days, so it's going to be a hit or miss. We bought the 10s for 65 and 70. They're at 50 now. But we sold some $15 calls against it for 15 cents. So we're basically risking 55 cents to possibly make $5. It's too good not to put the trade on. I don't like call spreads because it kind of keeps you in the name, usually more that you want to be in. I'd rather just buy the call, stock pops, I make my money and leave. When you sell that call on top and then it starts to rip, obviously the one on top is going to go against you and you're losing money on that call, and you're also capping your gain. But in this case, 50 cents, our cost average is basically 70, and we sold the other for 15. So 55 cents for a 10-15 call spread. I'm risking 55 cents. This thing rips to 15 the next 2 days. I just risked $550 to make $5,000. And now you can buy it cheaper. And let me remind you again, as much as SBET's been very nice to us, right? It's still a pump and dump. All right? Most of these stocks are pump and dumps. Be careful. Thank you for creating options, and thank you for being here. And I'll be back tomorrow and for the rest of your life. You're never getting rid of me. Peace, people. Good hanging out. That's when you fade out right there.